Got the head of fixed income of Alliance Trust with us. He's Rod Davidson. Now, Rod, how long do you think this contagion effect can actually go on for? We've got a lot more mileage as far as this goes.
Yeah, we really don't know at the moment. And this is all about the credibility of the ECB, the EU, and everything that's linked to it. Clearly, sovereign debt is a huge issue at the moment, and that's what a lot of fund managers are focusing on.
When you look at sovereign debt, you look at how much these bonds are yielding. Do you find, let's say, Greek debt in any way attractive?
You know, investing's a simple game. When you've got uncertainty, a lack of knowledge, a lack of clarity about the future, you don't want to touch the investments. There will be some buyers out there, but at the moment, it's like catching a falling knife.
Right. With that in mind as well, you know, at what point do you think that these Greek bonds will have to be restructured? And if so, you know, people have been talking about this haircut, i.e. that you reduce the value of them.
Yeah, I think our long-term position on Greek debt is it will be restructured at some stage. And I suppose until you know the terms of that, really, you don't want to get involved.
All right, let's carry on with the contagion story. What about Portuguese debt? And, you know, does Portugal really have the same set of, well, factors here which could drive it too lower?
Yeah, clearly Portugal's probably less of an issue. We would be more concerned about Spain and perhaps looking further to Italy.
Why Spain and Italy?
Just the bigger volumes of debt involved. And I think if you look at the web of sovereign debt, the lending between the countries, there are clear issues when you move to the bigger countries.
Yeah, 3 billion euros of debt going on the market in Spain today. Do you think they're going to get that off all right?
I mean, they will get it away in the near term, but they're going to have to start paying more and more, and this is a common issue that we're seeing.
OK, well, we look at Greece's debts, and I think they're just about nearly 13% of GDP. Britain's about 11.7%. You hold gilts, though.
Yeah, we only hold a very small amount of gilts in the portfolio because it's primarily a credit portfolio. But obviously at the moment what you see in the gilt market is it's performing very well because actually it was already trading at a premium over the European borrowers. So actually there was some comfort level there already. I think the thing with the UK is whilst there might be pressure for a downgrade, the UK's never defaulted and it has a history of getting through financial issues, and we don't see any reason why that won't be the case this time.
Oh, they're on credit watch negative, though, with many ratings agencies, so a downgrade is not out of the question.
Yeah, I suppose the UK still retains a degree of flexibility, not being in the single currency, and I guess that's one of the issues that we're seeing within the European Union is there is no flexibility. So in normal terms, you would have expected Greece to devalue and restructure its debt, i.e. default. Obviously, that can't happen within the single currency structure.
Very quickly, how much pressure is there now in the UK, or indeed even on the European mainland?
Well, you know, at the end of the day, this is a massive issue, and a lot of countries out there have to do a huge amount of funding. Austerity issues are going to be common across the world. You know, that's going to cause some fallout.
Rod, thank you so much for joining us. Rod Davidson there, he's from Alliance Trust.